frequency insurance is a concept where actually slow down time and you see events occur that you previously didn't see. Give you some backgrounds to this. We did some work many years ago with vehicles trying to look at, could I get a black box to be an expert witness in the event of a crash? So we worked with the Transport Research Laboratory and we crashed vehicles and crashed black boxes and compared it with their baseline. That's very, very expensive equipment, costs hundreds of thousands of pounds, and compared to what the boxes said. And it turns out that the boxes were only accurate about 6% of the time. This is a very small amount of time. But when we looked at why that was, we realised that there were two things. Firstly, the G-forces that these boxes were measuring wasn't enough. We were measuring plus or minus 5G. And it turned out you needed plus or minus 50G. So the way that a car crashes is that you have crumple zones and it goes junk, 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 junk. And those crumple zones create spikes in the G-force. So we needed to be able to measure a higher frequency. The second thing we needed to do was sample the data more. It turns out that we were sampling at 10 hertz, 10 times a second. And some of these spikes only existed for a millisecond. So we actually needed to sample it 3,000 times a second, or 3 kilohertz. And what that allowed us to see was it allowed us to see these spikes in there, which was great. But when I sampled it, say with my normal box, I just didn't see the crash. I just missed the incident. Well, we see that exact thing happening in trading. The stock trading, you can see that actually there are the spikes, but they go up and down. So you see these day traders or high frequency traders. Well, in insurance, we can see the exact same thing. So there may, for example, be an accumulation of risk in a port, which might only exist for 24 hours. So we've got pallets loads and container loads of iPads, very, very expensive, dense, value cargo, on ships which are getting bigger. The big container ships now, people are often shocked to see, will hold 20,000 containers on a given ship. So if you had 20,000 containers containing iPads, not that they all would, but you can imagine there's a huge amount of value there. And then of course you might have 2 or 3 of these things coming into any given port at one time with stuff on the dock side. So it could be that circumstances brings together a massive accumulation of risk, but just for 6 hours, or for 24 hours, or for 48 hours. But again, the way that the risk is being managed today is people do a once a quarter reconciliation, go, what's there, how does that work, or once a month, etc. And of course they miss those spikes. But as we saw a few years ago, there was a portside explosion, and things fell into the sea, all sorts of events occurred, and people are now slowly unpicking that. Well, of course, with our data, we're able to see these peaks, so we don't clip it this way, we sample it often enough. So now I can say, actually, you have an exposure. You now need to do something about it. You might have an accumulation of risk that exceeds your operating thresholds. So now I want to be able to place that risk. But of course, you were blind to it before. But then these are the events that cause you an issue as a business. And our belief is once you show people this, they can't not insure against it. So now I now have other products where I was over-insured here, but I'm actually under-insured in these other areas. And going back to our example of high-frequency trading and some of the gaming, if I can spot these opportunities and place that risk in real time, I actually grow the industry. We can see the industry grow and grow over time. And these sorts of industries have a habit of creeping up on us. So today there's a $45 billion industry that didn't exist 10 years ago. That we all fueled. You may not be aware, but the Apple App Store, 10 years old. Last year generated revenues of $46 billion. And today employs 1% of the working population in the USA. So 1.5 million people in the USA today derive their primary income from work related to the Apple App Store. So creating and selling apps on the App Store. So 1% of the working population in an industry that didn't exist 10 years ago. So when we look forward, I think, well, the future's full of opportunity, new insurance products. People are earning their money in different ways to how they can see it being placed and managed digitally. I think it's probably the most exciting time that the industry, for me, the most exciting the industry has probably ever faced.
So speaking of these opportunities in the industry, what do Concirrus do and how do you take advantage of them?
Yeah, so Concirrus, we believe that we're very uniquely positioned. So we have a background as individuals, we have a background in in technology and in the Internet of Things. And as a company, we've combined that with insurance expertise. So our belief is actually a relatively simple one. Our belief is that behaviour is a better indicator of risk than demographic. So knowing how old somebody is and where they live, etc., will give you an idea about how to assess their risk. But I could put 2 or 3 or 10 people in a room who are the same age, and intuitively I know that they drive differently. But you can't get that from their demographic. You can only get that from observing their behaviour. So what we've built is a platform which combines very big data with some AI and machine learning algorithms to extract the underlying behaviour of the risks that an insurer is insuring. And by getting those behaviours and combining that with claims information and market information, what we're able to do is to show an insurer today how they can make money in what is a very turbulent market. So there are pockets of risk where you can see that there's money to be made that you can't see just by looking at their demographics. You only get it by their behaviour. So we could say we combine that into a very, very user-friendly application, and we do something for an insurer in real time that, again, used to take months. So we can take their claims data in, and I can resegment their book of risk in real time and show them how they can make money in today's market. Not only do we do that, but behaviours, unlike demographics, change. So I might say you've only operated in the South China Sea, so you're this risk profile. You mainly you may travel in these shipping lanes, so you're this profile. But of course, your behaviour can change. So not only do we monitor what you've done, but we've monitored how that change is going forward. And today we have thousands of behavioural parameters. We think we have the best data in the market, understanding everything about a vessel's behaviour. So how, where and when they've been, whether they've stayed in shipping lanes, if it was time spent at night, when they went into port, which port did they go into, where did they dock, how did those manoeuvres occur. And importantly, we have the AI platform that underpins that allows a user to very easily understand how to make money for themselves. So we don't give them that and say, here you go, aren't we clever, we've created thousands of data points. It'd be much like me turning up to you and say, hey, I've got some answers, so I'm going to send you 1,000 emails a day, and buried in those emails is the answer. You don't want 1,000 emails a day. You just want one that says, I've taken care of this for you. And that's what we do. Take care of the outcome rather than give people, overload them with massive amounts of more input.